There has been so much that has happened since the beginning of 2026 that the markets have reacted to positively, negatively, no reaction. So, what exactly is going on in the market? Well, a lot. So, since December, since the beginning of the year, we have seen some improvement in the market. And there was a big announcement that came out that the president was going to have the Fed start buying up $200 billion worth of mortgage backed securities as a result of the surplus of cash that Fannie Mae and Freddie Mac were sitting on. Fannie Mae and Freddie Mac are essentially the government entities that buy up mortgage backed securities, AKA conventional loans. And so anytime that money is being poured into mortgage backed securities, it's going to drive interest rates down. And so the idea behind this is that if money is poured into these mortgage backed securities, it is going to cause investors to want to invest to purchase more of those mortgage backed securities. Investors make more money, going to drive interest rates down. And so what happened was we saw a really quick spike right here in demand, and it's backwards, right? So you would think that as this went up, mortgage rates would go up, but it's actually the opposite. So we saw a really brief moment of the markets really rallying around this information where it was, wow, this is exciting, this is great, we're going to start pouring money back into it. And then just as quickly as we saw a high, one of the highest points that we've actually seen over the last 12 months, it quickly went away. And then the next day, the jobs report came out, and the jobs report came back less than favorable. And then we had inflation reports come out where inflation overall is starting to slightly improve. It's still kind of stagnant. Forecasts for inflation are not great, kind of still seeing what's going to happen with the tariffs. Now that the Supreme Court is going to be ruling on the tariffs, is the United States government going to have to pay back the tariffs? So again, that's just causing a lot of uncertainty. And it's really the uncertainty in the market that causes investors to want to sell off their investments in mortgage loans, which again drives interest rates up. So as a result, investors, the money that they put into mortgage-backed securities, they then sold off, and it drove interest rates back up. So I'm getting this question a lot of, well, I saw that interest rates were in the fives, kind of. So on this day where we saw that temporary, just influx in demand for mortgage loans, interest rates touched the fives, just touched them. And then again, quickly within that week, investors started selling off their mortgage backed securities, again, driving interest rates up. And you can see today, we are actually back to where we were when we started the new year. So the market over the last 26 days, we have seen improvement, but unfortunately, a lot of that improvement is now back to where we are from the beginning of the year. Now, that's why it's so important to read past the headline, because while, yes, interest rates may have touched, it can be a little bit deceiving because, again, headlines are meant for clicks, that you want to consult with your lender to see how that's impacting you. Because a lot of times when you see a headline like that, it may not actually apply to you. It might just be, again, something in the case of a unique product, or it was just, again, for maybe an hour or two throughout that day. It could mean anything. So really relying on your realtor and your professional circle is going to do you a lot more favors than seeing what's on the headline news, because again, a lot of the information that the headlines are showing are for clicks. It's outdated information. It's not showing you the full picture. So even though interest rates may have touched the fives again, it also may be assuming a 25% down payment. It could be assuming that you're paying points to buy down that rate. It could be assuming anything. So you've got to see that headline and then do a little bit more research and just dig a little bit deeper. Now, since then, we have seen a lot of, again, just selling off of these mortgage-backed securities with what happened in Venezuela, and then last week with Greenland and the negotiations with Greenland. And is the United States buying Greenland? Are they not buying Greenland? Is the EU going to get involved? Just kind of this back and forth of not really knowing what's going to happen. And investors just don't like back and forth. Investors don't like volatility. Investors like smooth sailing and to know what to expect. So again, all of that information caused there to be a sell-off in mortgage-backed securities, which is again driving interest rates back up. Not up in the sense that they are going higher, but back to where we were going into 2026. And then the most recent news today, the headline news today, is that the Federal Housing Finance Agency, FHFA, there who oversees Fannie Mae and Freddie Mac, are they are exploring an initiative to again pour money into purchasing mortgage-backed securities, which again will with the idea of driving interest rates down with the goal of helping affordability. Now, will that help affordability? We don't know because again, as mortgage rates go up, demand will go up, meaning that there will be more competition in the market. But again, we will have to kind of wait and see what happens with that. So, um, yeah, so it's always interesting to see what the headlines say versus what the real picture is behind the scenes. If you have questions, of course, please never hesitate to reach out. Um, I'm always happy to review situations, talk about the market, and make sure that there's a clear understanding of what's happening. Just really quickly, this is a 90-day look back again, so you can see that we really have not varied too far from this kind of level right here over the last 90 days. But overall, we are sitting well as far as the mortgage market goes. So, any questions? Feel free to reach out. I hope you enjoyed.